In this video, I'm going to give you the top tips and tricks to maximize your tax refund. Last year, I made a video similar to this, which has received over 30,000 views in the past few weeks. And because of that, I decided to go over a few more key points to maximize your tax refund for this year. So here are the tried and true ways to reduce your tax liability during your tax time so that you don't have to pay more than you have to, and may even increase your tax refund when it comes to do your taxes. Hey, what's up guys? My name is Chase and this is a painting pictures guide to personal finance. If you're interested in more videos like this and finding out other ways to increase your tax refund and ways to increase that money, then go hit that like and subscribe button and we'll jump right into this video. And real quick, at the end of this video, I'm going to be giving you the secret to get the biggest tax refund possible this year, as well as how not to have to pay to do your taxes, so stick around for that. While many Americans do not agree with the way that the government is spending their taxes, almost every American will agree that they do not want to pay more than what they actually are required to pay when it comes to paying taxes. People want to save money and boost their refund when it comes to taxes, so that is why in this video we're going to focus on ways to increase your tax refund and reduce your liability so that you get the maximum amount of tax refund this tax season. Okay, so the first thing that you need to know about when you look at increasing your tax refund this tax season is knowing the difference between a tax deduction and a tax credit. So a tax deduction is actually going to just reduce the total taxable income or the adjusted gross income or the AGI. So this is going to be the money that the government actually sees that you make on a regular basis. And on the other side, that's going to be the tax credit, which will actually reduce the total amount of taxes that you pay by reducing your total tax bill by that specific tax credit. So it's kind of hard to understand just based off of these words, but when you look at it in an example, it's really easy to understand. So I'm going to give you a quick example that kind of runs into this and fully illustrates the difference between a tax credit and a tax deduction. So for this case, would you rather have a tax deduction of $20,000 or a tax credit of $10,000? So when you look at it this way, you can actually see that with a tax deduction of $20,000 versus a $10,000 tax credit with a same income of $150,000, the tax credit will be more advantageous. A $150,000 income leads to a $30,000 tax bill. And as you can see, the $20,000 reduction reduces your adjusted gross income down from that $150,000 level to $130,000. So you're only going to be taxed on $130,000 of income. This will then lead to a reduction of your total taxable bill of that $30,000 and reduce it by $4.4 thousand. Whereas if you compare that to the $10,000 tax credit, it will then just go that $30,000 tax bill and subtract $10,000 from that, making you only have to pay $20,000 in taxes. So that $30,000 tax bill and that $20,000 tax deduction will drop that $30,000 down to $25,600, whereas the tax credit of $10,000 will drop it from $30,000 to $20,000. So in the end, a tax credit can be way more beneficial to you as long as it meets a certain criteria. Now, this sounds great and all, but tax credits are a little bit less common than deductions, and these specific credits don't always work out because some are non-refundable and some are refundable. So if you have a non-refundable tax credit and you end up having to pay $1,000 in taxes and you have a tax credit of $2,000, you're not going to end up getting paid an extra $1,000 back to you. It will just make your total tax bill at the end of the year down to zero. Whereas if it is refundable and you do have a $1,000 tax bill and you have a $2,000 tax credit, then you'll end up getting an extra $1,000 at the end paid back to you on your taxes. Now, the fine details are important and looking to see if they are not refundable or refundable, and if it's a credit versus deduction will make a difference in the long run in your taxes. Okay, so the next thing I want to talk about is going to be looking at your deductions you have in your standard versus your itemized deduction. For the most part, people out there will want to use a standard deduction, but this has a set amount depending on your filing status, so you can either file single, married filing jointly, married filing separately, or head of the household. Depending on the tax year, this number will be adjusted based on what the government thinks is appropriate for that particular standard deduction. Now, if you want to go down the itemized route, then you can do that, but it just depends on a couple different factors. There are only a certain things that will fit into this category, and specifically speaking, real estate taxes, mortgage interest, and charitable donations will fall into this category, as well as a couple other things, but those are some of the bigger ones that may go into your itemized deduction and may tip you over that scale to move towards the itemized versus the standard deduction. So now you might be asking, which one do I pick, standard versus itemized, and how do I know which one is going to be best for me? Well, specifically, you're going to pick the one that's going to give you the best benefit, and whichever deduction is going to have the highest value will then deduct from your adjusted gross income and make your total taxable income even lower. So that's the biggest thing, is finding whichever one's going to make your total taxable income the lowest. So it's pretty simple. You're going to pick the highest one that fits best in your situation. Tax deductions and tax credits will actually help you increase your tax refund and will allow you to decrease the amount of tax liability that you have to the government. All right, now that we've taken care of tax deductions versus tax credits, I'm going to go over some of the top 10 tax deductions out there that you will probably be able to utilize and help you reduce your tax burden. So coming in at number 1 is going to be the standard deduction. This is the one that we talked about earlier, and that's going to be based off of your filing status. This one is pretty standard, and I'm not going to go heavy into this one and let you go look at that one yourself. Now, one of the deductions that people don't always think about is going to be the IRA contribution deduction. And if you're interested in this, pretty much any time you're putting the max amount into your IRA, you're going to be getting and meeting this full contribution deduction. And we here at Penny Pincher's Guide, we do recommend focusing on maxing this on a yearly basis so that you get your full deduction, as well as it can help you out in the long run with your retirement. But more on that later. All right, number 3 is going to be the health savings account deduction. If you utilize this as a regular basis, the money that you place into this health savings account is triple tax guarded. The money is pre-tax money that is safe to be used for a qualified medical expense, and to qualify for this, you do need to have a high deductible healthcare plan, but specifically for 2023, the contribution limit is $3,850 for those that are single, or $7,750 for families. So just like I said earlier with the itemized deduction, you can also have local or state taxes, and based off of those taxes that you pay, you can then calculate those up, and then you could affect your itemized deduction bill up to $10,000. So keeping up with these taxes and then adding it into your itemized can really affect your adjusted gross income. Another big one could be that if you have a large medical expenses, or if you're driving to these medical appointments, or if you're spending a lot of money on medical bills, then that can actually be calculated into your itemized deduction, and you can use that to go into your deduction as well. Okay, in today's day and age, many people are working from home. And if you did have a home office and you're working from home and you're self-employed, then depending on the size and the amount of work that you do in that office, there could be potential deduction, some of that in an itemized basis. The simplified square footage method assigns you a flat $5 per square foot rate to your home of office, and that can be up to 300 square feet. So that's a pretty big chunk of money that you can add to that itemized deduction that can then allow you to have a lower adjusted gross income. Okay, another big deduction that might pertain to you is going to be the student loan interest deduction. And this one is going to be based specifically on the interest that you're paying on your student loans. And this one will be capped out at $2,500 for that specific time period of your taxes. All right, the next deduction I'm going to talk about is going to be one that would be if you own your house, then you could claim a mortgage interest deduction. You can basically claim the interest on a house up to the first $750,000 of that house of interest as a deduction. All of the interest that you're paying over that year will then be added up, and that will be the specific deduction that will be option for you to place into your itemized. All right, the last one of the deductions is what I'm going to talk about is going to be the charitable contributions tax deduction. And it's one of those ones that people will be using most often because they are going to be giving to charities on a regular basis. Now, if you're focusing on itemized deduction, then you can go based off of how much you donate. But if you are filing jointly and you're taking the standard deduction, then you can get up to $600 even if you're not itemizing it. So that's a good trick that you can potentially lower it even more, even if you're doing the standard, and the only thing that you do for the year is going to be donating to your charity. So if you combine the knowledge of the deduction versus the credit while being proactive about getting the correct ones that fit right for your particular situation, then that is how you're going to get the highest deduction and the highest refund this year. Now, I hope you got some good information from this video, and if you're interested in learning how to file your taxes for free and not have to pay your taxes, then there will be a link right up here for you to check out. I hope you got some good information, and we want to remind you that we are here from your first penny to your first million. We'll see you next time.